Hey, it's Carol and Tim.
And we have something new and exciting for you.
Everything you love about Bloomberg Radio is now in your car.
The new Bloomberg Business app, now featuring Apple CarPlay and Android Auto.
Listen to your favorite Bloomberg radio stations anytime.
Plus every Bloomberg podcast, the latest news and more, all at the click of a button.
It's free and simple to use. Just download the Bloomberg Business app on your smartphone and connect your phone to your car.
The Bloomberg Business app, now with Apple CarPlay and Android Auto features. Download it free in the Apple App Store or on Google Play.
Presented by our sponsor, Interactive Brokers.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Shares of Pfizer down more than 5% here, their biggest intraday loss in more than 3.5 years. And it turns out not so easy turning out a weight loss drug. And we did have news earlier today, Pfizer dropping development of a twice daily version of its obesity pill. There were a bunch of side effects. So let's get to it. On the beat with us, Bloomberg News health reporter Madison Muller. She's back here in our Bloomberg Interactive Brokers studio, here with Bailey and myself. So, all right, what do we know about this?
Yes, so Pfizer has been developing a twice daily weight loss pill. And what happened? A pill. Okay. So that's, which we've talked about before. Pfizer, AstraZeneca, some of the drug makers that are not yet in this space but want to be, because all of the pharmaceutical companies want to be, are looking to pills, as an inroad into this market, because there's only one pill on the market right now. It's a pill version of Ozempic, and it's not very good for weight loss. So this is an opportunity for other drug makers to get in this space. And that's what Pfizer sees, especially as Pfizer has really taken a hit this year, as demand for its COVID products, its COVID shot, have sort of faded. It's looking toward the next big thing, that being weight loss.
It's down 43% this year.
Yeah.
The opposite of Novo, which is up 49%, and Lilly, which is up closer to 60.
Right. Yeah, we're definitely seeing a shift in the weight of COVID to weight loss.
Pun intended.
What's crazy is Pfizer is massive. It's a $162 billion market cap. And that, I get it. They're always doing a lot of R&D and looking for those, blockbuster drugs. Having said that, did they really just bet so much on COVID that it was going to keep kind of the revenue engine going?
Yeah, and I mean they've looked at other infectious disease like RSV, and they're investing more in cancer, but it's not giving the same lift that COVID did, and like these weight loss drugs now are doing for these other companies. So and what we've seen is the market is reacting so much to all of the news about these weight loss drugs. Every time there's a new study out, there's ripple effects, to far-reaching industries.
Either AI or weight loss drugs this year.
Right. It's just very disruptive. And so to have a negative result is something that, the company doesn't want to see, investors don't want to see, and that is what we saw with this twice daily pill in this study, is that there were so many side effects that over half of the patients in the trial had to stop taking it.
And is this a space they have to be in? Because they still have a single dose daily drug they're studying, right?
Right, exactly. And so that's sort of what they're pinning their hopes on now. We're going to get data from that once daily pill study in the first half of 2024, and we'll see what happens with that.
If it doesn't work, do they have to acquire a company? Because they're still trying to acquire Seagen, right? That's a big deal in the cancer space.
And that's the thing. Some companies are looking to their own pipelines to see what they can advance forward. The analysts that I've spoken to have said that when it comes to Pfizer, they probably will have to do some M&A or have to acquire some company in order to bring a viable asset into their pipeline, which the good news for them there are so many small biotech companies now that are developing pretty innovative products. Biotechs really see this as a space where they can potentially benefit, and so there are options out there.
But how much are they behind, though? If they buy a company that's in phase 1 studies, so very early stage, are they still trying to catch up to Lilly, Novo, and others?
Yeah, and they are behind, but I think at the end of the day, it's going to be about what is the best product, because right now, the weight loss pills that Novo's developing are they're not easy to take. It's like you have to take it in the morning every single day before eating food and then wait 30 minutes to eat. So it's not exactly easier necessarily than a once a week shot. And what we've seen is just different side effects with the pills. They're not any less expensive right now, at least, than the shots. And so there is space for these other drug makers to get into this market, even if it's later, if their product is better at the end of the day.
It's interesting. There's a stock that's on my gainers list today, Altimmune, right? And it's rallying because they gave some top-line results, and they did a mid-stage trial of their GLP-1 therapy to treat obesity. So you're right. Like, there's a lot of smaller players out there. Having said that, is it trickier in terms of a pill versus a shot?
Yeah, it is. It's harder. Even though pills are sort of, once you have the formula down, they're a little bit easier to manufacture, store, transport, but the science behind developing a pill is actually a little bit more difficult. And what we've seen with the pills so far is that they just don't cause as much weight loss as the shots do because of sort of how they're metabolized in the body. There are some more concerns about liver toxicity and things like that. So it's actually a little bit trickier to develop a pill.
But it's the holy grail, isn't it, for this?
I think that's how the drug makers see it. Yeah, exactly. Because, not everyone wants to take an injection every week or every day. So...
Well, have you gotten a sense from analysts and investors if they do see, just thinking, if I have to take a shot, but at least I'm losing far more weight, that weighs into the risk reward? No?
Yeah. That's what Eli Lilly thinks. They really still see a market in injectables for them, for their business. And they have said, even though Lilly has struggled with supply shortages primarily due to the injector pens that they use, and so pills for them is something that actually could help with their supply issues. But their executives are saying, we are not waiting for a pill to sort of save us from these supply problems. We're investing billions of dollars now, and we still really see a market for these injectables.
Talk to us about your beat, because you just came back from Eli Lilly. You spent some time with them. Tell us, if you can, what you can share about the visit in this space.
Yeah, it's interesting because Lilly is one of the oldest pharmaceutical companies. They've been around for over 100 years. They really got their start commercializing insulin in 1923, so they've been in this diabetes space for forever, and that's why they're at them and Novo, 1923 commercialized insulin. So for a century, these drug makers have been head-to-head in diabetes, continuing to innovate, and that's sort of why that's why we are where we are today, with both of them being at the forefront of this weight loss market, because the science and the investment that they've put into diabetes has led to these weight loss drugs.
It makes so much sense, because if you think about, is it 40-50% of the population, right, that are either diabetic or pre-diabetic? It's just massive, and that's just, I think, the United States alone. So you understand why all of these drug companies have been in that space, because it's a massive market, but their continuation of R&D has led us to kind of where we are today.
Yeah, and it's interesting because, I don't know if everyone knows this, but Lilly is the company that had Prozac. And so it's interesting to hear Lilly talk about the comparison between Prozac and now their weight loss drug Zepbound, because they said, when we brought Prozac to market, there was a lot of stigma and controversy around depression, and people thought depression wasn't a real disease, and that it was, something that could just be fixed with, making yourself feel better or whatever, going for a walk outside. There was a lot of stigma.
Easy,
yeah, and they were saying same thing with obesity. So we're sort of like we were at the forefront of depression treatments and now obesity treatments, and trying to break the stigma around that is part of this as well.
Did you get a chance to ask them their thoughts on whether they're reshaping McDonald's business model and Krispy Kreme, and whether or not
Great question.
Airlines are going to make more money because they require less fuel?
Yeah, they all kind of laugh it off, especially like the airlines comments and the Walmart comments. I think to these drug makers, and to I've talked to a lot of the scientists that discovered these, peptides and gut hormones back in the 70s and 80s, and they're like, we never would have thought that this would have turned into what it is today. Back in the 70s and 80s, literally no one cared about what we were doing, and then now the CEO of Walmart is saying that it's affecting, the weight of baskets in stores. Like, this is unbelievable, but that's science.
I think it also caught all of us off guard. You know, people also talking about apparel makers that, you're going to lose weight and you have to go out and, buy a new wardrobe and stuff. So it's kind of coming out in some very, very different ways. Yeah. Fascinating beat, fascinating story. Love hearing about it. And it sounds like Pfizer's not done yet.
Yeah, they're not done yet. We'll wait to see what happens in the first half of 2024, I guess.
One of our big themes, as I like to say, TBD about a lot of things right now in our world. All right. Carol Massar, along with Bailey Lipschultz, Madison Muller, Bloomberg News health reporter. Thank you so much.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg. Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
So, you look at crypto assets?
Raging.
What's up with that?
Non-stop rallies. I mean, even you look at the strength, and this was before the market rally in November. We saw it popping off in the second half of October, going from about $27,000 a token to north of $34,000.
It's quite a pop, and I'm even just looking at the trade today. You know, Bitcoin's up, Ethereum's up, Cardano's up, Solana's up. If you look at the Bloomberg Galaxy Crypto Index, up 18% in November. Bitcoin up about 9% this past month, and it's at its highest level of the year. So quite a run.
Highest level since May of last year. So
yeah,
we're seeing it really continuing to hit its stride and trading back towards that $40,000 level.
Bloomberg writing that Bitcoin's chances of hitting $40,000 top of mind. Crypto speculators, they head into the final stretch of the year, so they're thinking, can it go even further? So something to kind of think about. There's a lot going on, though, and we are definitely see, as everybody expects, maybe the Fed is done, even thinking about rates cutting. The risk trade is definitely on. That includes crypto. So what might 2024 bring? So let's get to it with our next guest. Cory Klippsten is CEO at Swan Bitcoin. It's the Bitcoin-only accumulation platform, and he is back with us on Zoom from LA. Cory, good to have you here with Bailey and myself. How are you?
I'm doing well, Carol, and thank you so much for having me on. And Bailey, nice to be here with you as well. I miss Tim. That's my usual guy, so say hi to him for me.
He is your guy. I will say hello. Talk to us about the activity you guys have been seeing as of late, especially as we've seen a move up, it feels like, across the board when it comes to crypto.
Yeah, I mean, we're in the good fortune to have customers who like to buy when the price is down as well, kind of the true believer crowd in the Bitcoin space, but absolutely influx of new users and big spike in volumes really over the last 2 months when you saw that rise that you guys were just talking about from 25 to call it 35, 36. And now it seems like we might have some legs. Feels very related to the latest round of news coming out of SEC whisperers about an ETF in January, but yeah, this move seems to have some legs up above 38K, heading into 40.
Yeah, and we saw Bloomberg Intelligence expects that ETF approvals to start in mid-January. Is that your expectation, and kind of how does that change the game for Bitcoin?
Yeah, it is probably my base case, is that window that now seems to have been narrowed to January 8th, 9th, 10th, something in there. And that seems to make a lot of sense given all the signals that we've gotten out of the SEC and folks in the know. And I think it changes quite a bit for Bitcoin. And primarily the story that I'm looking at is for the past 6 years, from 2017 through 2023, the top of funnel for people looking to get into Bitcoin has been extremely noisy, polluted by all of the crypto marketing schemes funded by $50 billion of venture capital trying to essentially market and dump crypto tokens. And now you're replacing that with signal coming from the largest, most trusted financial institutions on the globe, who are going to be talking about the real signal in the space, which is Bitcoin, very distinct from the rest of non-Bitcoin crypto. And that is now the top of funnel for Bitcoin. And it's a decent product. It's an IOU into an ETF. And it's kind of, it is paper Bitcoin, but it is backed. They have to buy the Bitcoin. It's not futures based. And I think that's a great top of funnel for people to get into Bitcoin. And then if they want to go a little deeper and explore it and hold more, what we've seen historically is that as people buy more and learn more, they take self-custody. And so they're going to graduate from that ETF product into holding real Bitcoin.
Cory, what do you know about who's buying, the demographics of actually crypto buyers, Bitcoin buyers in particular?
Yeah, so the buying public is, as you can imagine, very widespread. It's easier to make the pitch to Gen Z and millennials who aren't as encumbered by historical understandings and kind of received knowledge about the financial system. But then when you look at it from an actual dollars in, it obviously skews toward the boomers and the Gen X that actually have more money to be able to put in. So you see more customers coming from the youth of the country, but more dollars coming from those that are more established and have more money today.
How much more are volumes up? You said you've noticed some significant trends, but give us an idea. Can you give us some numbers? I'm just curious about.
Yeah, sure.
Because it gives us an idea.
Absolutely.
You're kind of one of the kind of feel like ultimate risk trades. So it gives us an idea of kind of what's in investors' mind. Because we just had, what was it, money market funds, was it yesterday, hit a record high. So I'm just curious and trying to make sense of kind of the investment environment overall. not apples to apples.
First, I think I do have to address this idea of Bitcoin being a risk-on trade, because that's counter to how it's being marketed by the ETF guys. They're talking about it as a safe haven and risk off, and so that narrative is being changed. And again, it's all around. It's not an inflation hedge in the terms of CPI, but it's an inflation hedge in the terms of monetary inflation. It's a hedge against printing more money, the original definition of inflation. So I think that is a really interesting thing to note. As far as volumes, up about 100%, I would say, in the last couple of months. If you kind of just looked at September versus November, which we're closing right now, it was probably up about 2x November over September.
Is there a risk that this can be a sell the news event, though, with so much excitement and that jump that we're talking about from October to now?
There is no such thing in any asset, including Bitcoin, of a straight walk up in a straight line to some price that everyone expects in the future, because people will always front run that and get exuberant, and then it'll always crash down. There has never been a large bull market swing in Bitcoin that hasn't had a pullback along the way of 40 or 50% down. So, I do believe that we are in the early stages of what is very likely, given macroeconomic factors and given domestic factors with the ETFs, et cetera, and just kind of more people understanding what Bitcoin is, that we'll see another big bull market at some time in the future. And I think it's very likely that it happens over the next couple of years. But during that, we will absolutely see big drawdowns too.
Cory, one of the things, we kicked off talking about the expectations for a U.S. spot Bitcoin ETF next year. And so that has certainly given some enthusiasm back to the market. But I also think about the legal overhang. And we got rid of two big things, SBF and FTX, and also Binance. Big deal, big settlement. I'm just curious, there's Kraken still out there, right? There's some legal concerns. I just wonder how you think about some of the legal woes or surprises that could still certainly creep up when it comes to this market.
Yeah, it seems that Bitcoin stands apart from everything that's been going on in the crypto space, right? Every single non-Bitcoin crypto runs the risk of being targeted as a security by the SEC in the United States, and any crypto platform that isn't playing by the rules, let's say, as they exist on the books, runs the risk of running afoul of AML KYC violations, money laundering, essentially, if they've been too loose with their customer onboarding and monitoring. Then it's very likely that they, whether purposefully or accidentally, have facilitated bad people doing bad things on their platform, as the DOJ has made very clear with respect to Binance.
So really, in your view, Bitcoin is insulated from those concerns and issues and bad actors, and that the clearing out is bullish for the token?
So if you're a Bitcoin-only company and you do things on the up and up, just like any other company, you don't really have to worry about these sorts of things. As far as Bitcoin as a monetary technology and payment rails, it's technology just like the dollar is technology, and bad people will do bad things with money. So they can use Bitcoin, they can use dollars, they can use euros, yuan, and yen to make transactions. There's nothing you can do about that. It's just technology. It's neutral.
So what is, we just got about 30, 40 seconds left here, Cory, as we wrap up. As you look ahead to 2024, you sound optimistic. I hear it, no doubt about it. And it is your book. But what is it that you do get concerned about when it comes to the crypto environment? What is the one possible downside that maybe might be top of mind for you in just about 30, 40 seconds?
Honestly, the most interesting challenge I'm really looking forward to taking on is to figure out how to talk to people about our frenemies, right? We're already being used. Our people are already giving webinars inside of these large TradFi firms, educating their people about Bitcoin as they ramp up their knowledge and their understanding. But at the same time, we sell a competing product with selling real Bitcoin while they sell paper Bitcoin. So I think just figuring out that dance and being kind of all on the same team, and rising tide lifts all boats, and knowing that this is going to be very good for our business, but also understanding that as people get more deeply educated and more financially invested in Bitcoin, they're going to want to own the real thing and not an IOU. And they're going to want to pay for it once instead of having to pay for it every year. I think that will be a winning message in the market as well.
All right. Well, listen, Happy New Year. Happy holidays. I look forward to talking to you in 2024. Cory Klippsten, of course, CEO at Swan Bitcoin, joining us from LA.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Bailey, saw a story kind of was on my radar as I was getting ready to prep for this guest. Bezos Earth Fund, they're going to put $57 million into climate food solutions that include developing low methane livestock to curb emissions of the potent greenhouse gas. Andy Jarvis is director of the Future of Food program, and he talked about this in a video interview from Dubai. Food systems, they, when it comes to growing it, processing, distributing, consumed or thrown away, account for about a third of global greenhouse gas emissions. Much of that footprint is linked to livestock farming, a major source of methane, deforestation, biodiversity loss. So it's a big contributor to climate change.
Big deal. And that's one of those things when you debate almond milk versus regular milk is almonds take a lot of water, but also there are a lot of things that come out of feeding and kind of milking a cow.
Yeah, and I feel like that was a later discussion, but livestock is really front and center. COP28 underway will be for the next couple of weeks. So with that in mind, we welcome in our guest, Benjamin Wolkon. He's founding partner at MUUS Climate Partners. It's a venture capital arm of Muse and Company. Its website says it invests at the convergence of climate solutions and high-tech applications. He's on Zoom in New York City. Ben, great to have you here. Tell us about your firm and your investment philosophy.
Thanks for having me on.
Yeah.
At MUUS Climate Partners, we're focused on areas where technology can help us decarbonize the economy faster. When we talk about the sectors that need to go to net zero, we're talking about electric power, transportation, buildings, industry, and agriculture. We need rapid scaling of technologies that can replace dirtier incumbents with cleaner solutions. And we're looking at investing in companies that can create those solutions in real time.
All right, so where have you been investing? What do you think are some of the top investment ideas that you've really been committing money to?
Well, right now we're really excited about the innovation that's happening in home heating. As we know, heating is a major cause of climate change. You have a lot of homes that are powered by gas and by oil, but there's this quiet revolution that's happening right now in heat pumps. Electric efficient systems that are much lower emissions. We're really excited to be backing a company called Harvest Thermal, for example, that's not only deploying heat pumps, but pairing those with smart controls that can draw power from the grid when renewables are online and match clean energy supply to home energy demand. So that's one of those examples where analytics and advanced software can be paired with a known climate solution to make it even better, a better value proposition around it, and something that can scale more rapidly. So home heating is one thing that we're excited about, but there's a lot of other innovation across electric power and others.
I think this whole idea, is really interesting when you talk about what you guys are investing, kind of smart thermal, if you will, storage and heating. Having said that, how expensive is it for like a home to do it?
Well, it depends exactly on where you are. One thing that we're really excited about is IRA, the Inflation Reduction Act that passed a year ago, a little over a year ago, helps with incentives for homes. But even with or without IRA, the payback of it is actually quite rapid because you've reduced your energy bills so dramatically by having such a more efficient system in place.
So payback in 4 years, 5 years, 3 years, 2 years?
It really depends on where you are geographically.
Interesting. Well, Ben, I guess looking at your portfolio broadly, though, what stage are some of these companies in? Like, how big are they? Are they producing these products in a number of houses? Are they still kind of early stage and really more in like that study phase?
Yeah, in venture capital, the alphabet game has gotten a little bit jumbled where Series A, Series B, Series C could mean a lot of different things. So we try to be very specific and say that right now we're investing at the cusp of commercialization, which means we're investing when companies have a great team in place, a great early product in place, and they've either just signed up their first customers or they have credible, verifiable line of sight to those first customers. And they're looking for a funding round that can help them accelerate and scale.
Well, with the funding environment that we're in, it's difficult for companies to get cash. How has that changed for you guys putting money to work, just given where we are with rates as high as they are and the kind of dearth of offerings, both publicly and privately over the last 2 years?
I would say that we're sort of blown away by the resilience of climate tech. Even with everything that's happening in the broader market environment, there continues to be a great deal of enthusiasm around the space. A lot of new dry powder sort of popped up in the last 2 or 3 years, and that really catalyzed a lot of entrepreneurial talent coming into the space. People want to be working on this solution. They want to be building things that can help address climate change. So while I know there's some data out there saying on a quarter to quarter basis, there might be some slowdowns, we're really seeing as much talent and as many opportunities in the space as we ever have.
Ben, what about the EV space? I mean, obviously we know all the big players. We've talked a lot about, Elon Musk today because of his Cybertruck, but nonetheless, there's, global manufacturers increasingly have ramped up EV offerings, but it does feel like the demand part of the equation has fallen off. And I feel like we were just talking about everybody kind of almost a tipping point, but it just feels like all of a sudden there's a pullback. What are you seeing in that space?
It's interesting because I have read those headlines. So I looked into the data, and every quarter so far in 2023 has had higher EV sales than that same quarter in 2022. And I think we're just shy of 4 million EV sales per quarter right now. So the market is growing, and you're hearing a number of individual automakers saying that they're hitting new records. I think the Ford F-150 Lightning was an example. So we're really excited about what we're seeing there. From our standpoint at MUUS Climate Partners, we're looking at earlier stage opportunities. So, for example, we were an early investor in a company that's become the #1 electric farm tractor in the world. That's Monarch Tractor. And we're also looking at opportunities of AI applications that can help large corporations and large cities scale and manage their electric vehicle fleets.
Ben, we got about 45 seconds left here. Obviously, I think everyone can agree that climate change, getting away from fossil fuels, is a big next step. But getting to those materials for batteries, mining is poor, bad for the environment. What do you do with batteries afterwards? How do you strike a balance in terms of kind of cleaner energy, but with the costs that come to produce those goods?
Yeah, the entrepreneurial talent that's come to bear in climate tech is also focused on this. And at MUUS Climate Partners, we've backed a couple of companies that are looking at the battery economy of the future. One of those is a company called Nth Cycle, which I believe has been featured in Bloomberg a number of times, which has made it a next generation factory to reuse and reintroduce metals into the battery economy.
Yep.
We've looked at a number of others as well.
Well, come back soon. Love to continue this conversation. Ben Wolkon, he's founding partner at MUUS Climate Partners, joining us on Zoom in New York City. Carol Massar, along with Bailey Lipschultz, you are listening and watching Bloomberg Businessweek, and this is Bloomberg Radio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Here in the United States, you'd be hard-pressed to find a Chinese-made car on the road. We're going to talk about AI a little bit later on. So we want to talk a little bit about what's going on in the auto world. You might see a rare Polestar here or there, but in general, you're not seeing Chinese cars in the United States. But you travel, Bailey, to our neighbor to the south. Quite a different story.
Yeah, and that was the big finding from a terrifically reported story, basically diving into the fact that Mexico is buying up a whole lot of Chinese cars and Chinese vehicles broadly.
Yeah, who knew, right? It's one of those kind of stories, which is what Bloomberg Businessweek does so well. Amy Stillman is Mexico business reporter for Bloomberg News. She writes about China's dominance in the soaring Mexican auto market, the new issue of Bloomberg Businessweek, which is on newsstands, online, and of course on the Bloomberg. Amy, thank you so much. You are joining us on Zoom from Mexico City. So tell us exactly what's going on and how dramatic it is.
Thank you, Carol. Yeah, so what we've been seeing is that Chinese car sales have really been ticking up pretty much since the pandemic. So really 2021, 2022, 2023, we're seeing a really big increase. This year alone, for the first 10 months, we saw a 51% increase in sales. And now car sales are roughly about Chinese car sales are roughly about 20% of total sales in the market. So it's really been a very, very big increase in the last few years. And, part of the motivation for that is that, when you did have the pandemic, you saw a lot of the Western car makers running into difficulty with inventories and issues around chip shortages. And the Chinese automakers were really able to, come in there, meet that demand, and really have been meeting a lot of consumers' expectations on price and improvements in quality as well.
And how has this shifted, though? I'm looking at a terrific chart that you have in this story that China basically was not even remotely a player by any stretch just a few years ago.
Exactly. What we can say is that the Chinese automakers have very aggressively been moving into Mexico. It does give them a foothold in North America. It has been traditionally very, very difficult for the Chinese to get into the U.S. So the fact that they have been able to really expand in Mexico without much resistance has really been a boon for the Chinese car makers. At the same time, what we're seeing is that in China, while you've had this big surge of electric vehicles, the regular gas-powered vehicles aren't in as much demand. And so there's actually an oversupply issue. So a lot of those cars, the gas-powered vehicles, are now coming over to Mexico. You've seen real differences in price, which here in Mexico, that's a very big deal for consumers. They don't have as much access to financing as consumers in the U.S., for instance. And so that's been very, very attractive as well.
Yeah, it's kind of interesting that it's all gasoline-powered vehicles when we are so obsessed with the EV world, but that's not what's happening. But I get it in terms of the market. But you do wonder if ultimately, Amy, it gives China and Chinese auto manufacturers kind of a leg up as the world increasingly moves towards EVs.
That certainly seems to be the next step. You've seen also Chinese EV makers, like the biggest Chinese EV maker, BYD, has started to sell cars here in Mexico, electric vehicles here. They've been negotiating deals with some of the biggest Mexican conglomerates to sell fleets of electric trucks. They've also, launched a new deal with a big retailer over here, Liverpool, to sell their cars and as well as, install charging stations, which is really speaking to, some of the bottlenecks in Mexico around charging infrastructure. So certainly there's definitely a push by the Chinese in the electric vehicle market as well.
And Amy, do you notice the shift? I feel like when I see a Rivian, I'm like, oh, there's a Rivian truck. Or if I see a Lucid Air, it stands out to me. Have you noticed really this penetration, this jump in China-made cars?
Well, what's very interesting here is that if you go to get an Uber, there's a good chance that you're going to be in a BYD electric vehicle. A company here, Venmo, has partnered with Uber and using BYD electric vehicles to transport people around Mexico City. So if you're in the city, if you take Uber, there's a good chance that you're going to see the penetration of some of these electric vehicles from the Chinese car makers, Jack as well. You're also seeing more of these cars on the road. So there's certainly a noticeable presence.
So you've ridden in one then if they're primarily ride sharing? Did you like it?
Yeah. They're very interesting. I spoke with the driver. She told me, it's great because, the vehicle won't start until you buckle up. So it's a nice safety reminder. And, in general, they seem like very efficient, very good cars.
It does sound like the China has to watch. We just got about 20 seconds left. Competition, Amy, is coming from U.S. manufacturers, global manufacturers for Mexico?
That's correct. There are a lot of companies, Western companies, that are looking to build plants here. Of course, the biggest one is Tesla. There's a lot of expectation that Tesla will launch in Mexico in the next few years, and people are very excited about that as well. So the Chinese car makers will certainly need to watch for the competition.
Very cool. Like I say, it's one of those Business Week stories. It's like, wait, what? I didn't know this was going on. Amy Stillman, thank you so much. Mexico business reporter at Bloomberg News, joining us on Zoom from Mexico City. It's in the new issue on newsstands, online, and on the Bloomberg. This is Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. And I'm not sure if you saw this, Bailey, but Bloomberg opinion columnist, former CEO of PIMCO, Mohamed El-Arian, writes today on the Bloomberg on how uncertainty looms over this November to remember, more specifically how investors and analysts risk underestimating the challenges ahead during the period of understandable market euphoria. I mean, it's been quite a run-up in November.
Fascinating piece from Mr. El-Arian. The interesting thing, Carol, to your point, we saw the Dow, S&P, Russell all up about 9%. ARK, remember ARK had its best month on a percentage basis ever. 31%. I mean, massive rallies.
Crypto's up.
Bitcoin is continuing to rally. And we started off today pretty red hot.
I'm curious what our next guest has to say.
I know. And with that in mind, let's get to the drive to the close with Carol Schleif. She is the CIO at BMO Family Office, back with us in the Bloomberg Interactive Broker Studio. Carol, how are you doing?
Great. It's lovely to be here, and I love to see the activity in downtown New York.
It is nice, right?
It's really great.
It feels like the city is back in a big way.
Especially on a Friday. I feel like my commute was
busy?
Ghost town this morning. But then I get to the city, coming from the New Jersey suburbs, I get here and everyone...
There are a lot of tourists here for the weekend. Christmas in New York, what's not to love?
It's the best.
They just lit up the tree? Yeah.
Well, so let's say, Mohamed El-Arian seems to be a little like, don't get ahead of yourself. How do you feel about that? Do you agree with him?
Yeah, I would definitely agree with him. And especially it was listening to the lead-in about Powell saying we may not be done and we're going to keep them high, and yet the market's like, oh no, they're done. We're off to the races.
I'm a little confused by that again.
I actually think the only analogy I can come with is when my teenagers would go, Mom didn't say no, she said maybe.
Yeah.
And maybe means yes.
Yeah, I was going to say with that in mind, so that's more of like, because he was balanced, that inherently is dovish.
Yeah, exactly. And I think the markets being discounting mechanisms and looking ahead are really trying to get towards that end game. We think it's premature. We do think they'll start to cut at some point next year, definitely not in the first quarter. And there's a lot of issues.
Could be first half, though?
My own suspicion, our house view is we're not going to peg it that close, but my suspicion is it's later in the year, because Chairman Powell can't be very happy with the fact that the 10-year came from 5 and is down now flirting with 4.2, because they still need that inflation. The core inflation is still running at twice what they want it to run.
I laugh because I feel like I've certainly been talking about this to other people. I'm like, don't worry, you'll get to refinance it. Like all of a sudden we're watching like rates come down, and I do wonder what kind of activity will come out of this.
And I do think, because when you look at the demographics of it, there's a whole bunch of pent-up demand demographically, and if you could get the prices of the houses to come down, because a year and a half ago, if you had said, we suspect they'll see a huge uptick if mortgage rates hit 6%, but right now, if they hit 6 or 6.5%, I think you would get a lot of people coming out of the margins, because there's when you get to the point where you start having kids, or you have more kids, and you outgrow the house, and you want to be a bit further
Billy, you bought a house.
I just bought it 6 1/8 and felt like an idiot at the time, but now I feel like a genius.
Well,
lucky, I guess. I don't really have control.
I mean, here
over
I'm dating myself. My first mortgage was 12%, and a year later, I thought I died and went to heaven when I got to refinance at 8%.
Do we get anywhere near 5 rate cuts next year, like the market's pricing in?
I don't know if we get 5 rate cuts, but I think what the market will focus on is not the number, but the trend and the fact. And I think that's what the markets are really keying in on. But they got a bit ahead of themselves, we suspect, just especially in the near term, both stock and bond markets, with the exuberance you've got, because you do have a lot of headwinds that you're facing. And by the time we get to January, February, we're still facing, again, can we keep the government open top to bottom?
Do you think a recession's part of this? And I guess my other question is, can we have a recession with a decent job market? And then is it a different type of recession, which maybe is still supportive?
See, we've never
bullish trade.
Yeah, we've never been in the recession camp. We said soft landing from the beginning on, and continued to talk about that. And actually, when the whole rest of the world jumped on soft landing, we were like, oh, but there's a whole lot of things out there now that might make this a little rocky. But you do have the underpinnings. The thing that goes unrecognized a lot is we have so much fiscal stimulus coming into the system still. Now, if that were to get reversed because you had regime change, if you will, in terms of after the elections next year, and you started peeling some of that back, that could put pressure on it. And we do have to figure out how we're going to pay for all of it, because that, those concerns haven't gone away. They're a bit easier if you don't have 5% 10 years, you've got 4.2 in terms of refinancing the debt. But we were at the point where we were adding $1 trillion just to service the debt.
And one question I have looking ahead to next year, NASDAQ's returning 47% this year, S&P 22%, equal weight just 8%.
Right.
What does the market look like in 24 given the dispersion we saw in 23?
We do think you get more broadening out. You have to in order to sustain this.
We are already, aren't we?
Yeah, we are. And you saw it hinted at in the spring because through May it was the Magnificent Seven, and then in June into July you had a broadening, and then you had 3 really bad months, and you're getting a bit more broadening. But to your question about recession, we have had rolling recessions underneath the surface, and we've seen periods like that before. And I think if you step back from it too, it's also indicative of the fact that when you've got secular change going on in the markets in terms of, initially I think people thought we were going to go back to 0% neutral rate. We're not. That was the anomaly, was the last 10 or 12 years. And so when you go through a period where you're trying to reset expectations and anchor to new things, you get a lot of this rolling around like we had, where you get one trend that'll play for 4 to 6 weeks and then it'll pull back and it'll go a different direction. But if we can get this leveling off in here where the economy does okay, interest rates are reasonable, and people have pricing power. I mean, the key will be to watch too in the next couple of months with what happens with the consumers, because when those credit card bills start coming due in January with all the headwinds, it's
that
real stuff.
all the buy now, pay later, which our intelligence analyst was saying that people feel confident that they can pay it off in the couple of months before rates, but it's just kind of interesting.
Yeah, it is nerve-wracking, and I suppose if you get a December bonus and you're putting a few of that on to get them tucked away early,
you can take care of it.
But I've also heard a lot of the stories too about trying to get, the retailers are trying to get that spending early because they're not sure people are going to be able to sustain it through the season. And it's been a long time since I've seen the 40, 50, 60% offers starting around Halloween, continuing, only through Black Friday. We'll extend it beyond. And,
I agree with you. The emails are continuing. Hey, real quickly, 25, 30 seconds. You like industrials, healthcare, technology. Technology, what do you like in technology? Just quickly, I'm curious.
I think they're figuring out the impact and where artificial intelligence is going to play as piece of it, cybersecurity, the build out of infrastructure. It's all undergirded with technology.
So it'll continue to be a theme next year.
Right.
No doubt about it. Thank you so. Do you have a last one?
No, I was just going to say, I guess, are you looking for like kind of tangential second, third derivative AI plays?
Yeah, I think so, especially because it's really interesting when you think through what will it do for diagnostic imaging, so you don't have a radiologist looking through.
I love that idea.
Screens. Yeah,
I think that's going to be powerful.
It's huge.
Carol Schleif, happy holidays, Merry Christmas, Chief Investment Officer at BMO Family Office in studio. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.